Hey, if you're wondering if you can buy a house with bad credit, well, guess what? You found the right video. So let's go ahead and cue in that intro and get into the topic, please. Hey, how's it going, friend? Juan Pablo here. Thank you so much for visiting this channel. On this channel, we typically like to focus on the 3 pillars to financial freedom, which are personal finance. We deal with credit and all that stuff. Funding, having a repeatable source of investment capital. And last and certainly not least, real estate investing, where we focus on multi-units and multi-family investing. So if you're new, make sure you like, subscribe, share this video so that way the algorithm can do its thing in regard to providing you with additional material, additional content and videos to help you along your journey towards financial freedom. So without further ado, let's dive into the topic. All right, so that's a really great question, isn't it? If you can buy a property with bad credit. Well, the first thing we need to clear up is this. What is bad credit? Because there are certain mortgage products out there who will be willing to provide you with a loan based upon you meeting certain credit scores and other metrics. And secondly, what type of property are you trying to buy? Are you trying to buy a personal residence or an investment property? So what I want to do is tackle these things in today's video. So let's tackle the first part about your what is considered bad credit and the different mortgage products out there. So if you're buying a personal residence in which you're going to live in that residence, that's called an owner occupant. If that's you, then there's many different mortgage products out there that can provide you with a mortgage even if you have some negative items on your credit report. Now, at the time of this recording, because I'm sure you're aware that interest rates change. I'm sure you're aware that mortgage companies change their criteria and their requirements, okay? But at the time of this recording, most mortgage lenders will be able to provide you with an owner-occupant mortgage with a 580 credit score. So you might be wondering, 580, how do you come up with 580? Is that an average? Well, typically what mortgage lenders do, they rank your credit scores from lowest to highest. So let's say you had a 560, a 580, and a 600 credit score. So your middle score in that scenario will be 580. And that's what they're going to base their qualifications off of, okay? Now, if you happen to have at least a 580 credit score, and let's say you also have documented income, because those are the 2 things that matter when getting qualified for a mortgage, especially for personal reasons. You know, you're living in the property, owner occupant, as I mentioned before. They care about your credit and they care about your income. And your income has to be documented, meaning they don't want to see you making money under the table, but can we see tax returns, W-2s, 1099s, bank statements, pay stubs, things of that nature. They want to make sure that you're able to pay this mortgage. So they want to verify your income. So let's say your income is good, but your credit is a little bit lacking in regard to having a lot of positive accounts on your credit report. That's perfectly fine as long as your credit score is at a 580. Okay, now there's some mortgage lenders out there as well who'll be willing to work with you and share with you some tips and tricks of how to improve your credit. And they may recommend even credit repair. So if you're interested in credit repair, we have a link below for you to apply. So that way we can, we have a free video for credit repair. So that way you can get some access to learning how to boost your score 50 to 100 or even 200 points. And we also have another video, just check the link below in the description, about credit. So that way you can have a full idea of what credit is involved, especially towards real estate investing, okay? So let's get back to the topic. All right, so let's say that you do have a few blemishes on your credit report, but you're at a 580. Now with a 580 and your income looking good, most mortgage lenders should be able to provide you with an FHA mortgage. That's Federal Housing Administration mortgage, which means it's backed by the secondary mortgage market, Fannie and Freddie. So with the FHA mortgage, their terms tend to be a tad bit more lenient than others, especially investing in real estate. So being that you're going to be living in the property, they're okay with you having a 580 credit score, and get this, and they're okay with you putting 3.5% down payment. That's nothing. For my first property, the only mortgage I qualified for was the FHA. I think I had somewhere between a 580 and 620 credit score when I first applied. So I barely got qualified by the skin of my teeth. I had some documented income, and I bought a multi-unit. I bought a duplex. So the great thing about a duplex is that I was able to live in one unit and rent out the other, which helped me accomplish my dream of becoming a real estate investor. And being that I had that other unit as a rental, that revenue from that second unit, that rental property, helped me qualify for the property as a whole. That income, even though I didn't close on the property yet, that income from that rental unit was added to my qualifications for income. As I mentioned, they care about documented income. So that income from that rental unit was also added to my qualifications. So it was perfect. And that was pretty much the only loan I qualified for, and the only loan I needed at that point, because I was new to being a property owner, being new to real estate investing, and it was just perfect. So even though I had the bad credit, and even though I had limited funds, I was still able to buy somewhat of an investment property. It was an owner occupant, yes, because I live in one unit and I rent out the other. So I became more of a hybrid investor. Okay, so that's one thing that you can do. Now there's other mortgage products out there, conventional mortgages. So I highly recommend for you just to reach out to your preferred mortgage lender, so that way you can get some tips and tricks about what to do, as well as what mortgage products that you do qualify for. Now let's say you want to get into real estate investing and you have bad credit. So you might be wondering, so what's the bad credit score for that if I want to invest? Again, every mortgage lender has different criteria, right? They have different interest rates and they have different processes, different requirements. But from my experience, and at the time of this recording, about a 640 is good towards getting qualified for investment mortgage. Now, I do recommend you to aim higher. My preference is 680, because at a 680, that's considered pretty great credit. And you can leverage your credit for not just mortgage purposes, but also for business credit. And by the way, I have a video below about business credit. Just check the link below in the description to learn more. But you can also use that 680 for many other reasons. But let's say you're at a 640. Perfect. Now, if you have a 640 credit score, that's decent enough to get you qualified for an investment mortgage. The downside though, when you're doing investment mortgages, especially if it's somewhere between 2 to 4 units, they only allow you to put a 20% down and nothing less. Now, if you do multifamily, 5 units and up, you can get a little bit more creative with the financing. You can negotiate seller financing and just bring 10% down payment to the table, because the seller brings another 10% and the mortgage covers 80. So the mortgage and the seller 90% and you 10%. But when you're doing 2 to 4 units, that's considered residential. Unfortunately, you have to bring 20% down payment to the table. However, this is an investment property. So hopefully, if you're buying a property for investment purposes, you do have some skin in the game. You do have enough capital to go towards the down payment. So either way, you want to be able to obtain a 640 or higher, and again, have that documented income. Now, let's say that you're below a 580 and you're buying a property for personal reasons, owner occupant. Or let's say you're below a 640 and you want to buy a property for investment reasons only, meaning you're not going to live in the property. The question is, well, how can you go about improving your credit? Well, the first thing you need to do is you need to take a look at your credit. And I have a link below, check in the description, so that way you can get a credit monitoring service so you can see what's on your credit. And then once you see what's on your credit, you have to go to public records to see if there's anything negative there, such as bankruptcies, foreclosures, tax liens, judgments, things of that nature. And then you want to look at your credit report on all 3 credit bureaus to see if there's any KDs, key derogatory items, KDs, key derogatories. See if there's any late pays, see if there's any collections, charge-offs, medical bills, see if there's any evictions, see if there's any late pays, if I haven't said that. Just see if there's anything negative in red on your credit report. And those items in red, those are the items that you want to dispute. All right. Now that's it, guys. So if you happen to have bad credit, sure, you can still get properties with low credit. But if you have bad credit, below a 580 for personal reasons, below a 640 for investment reasons, yes, you still need to build up your credit, but you can also find deals creatively, okay? So what I want to do is I want to share with you a link. Just check the link below in the description. We have a free training for you, and I think it will help you out immensely to help you improve your credit and get into some real estate. As always, guys, this is to your success. Continue to earn passively, live passionately. Peace.